Hi, Pat. Welcome to the Expat Property Podcast. Delighted to finally have you on. We've talked about this for a long time. So for those that haven't come across you before, do you want to tell us a little bit about yourself and your company?
Thanks, Steve. Yes, so my name's Pat Harper, founder of Total Property Group, and I help busy investors build hands-free, high-yield property portfolios in Liverpool. My clients are mainly London and internationally based, although I have worked with a couple of local people as well. And they have three main problems, my clients, when they come to me. Number one is, they have very little time, and the Liverpool market moves so fast. It's easy for people to miss out on the very best deals if they don't have them relationships. And the other one is too many choices. So you open Rightmove, you've got like 1,000 choices to look at, and it's easy for people to feel overwhelmed, especially if they've already got a full-time job. Property isn't their full-time thing, so it's so easy for them to feel overwhelmed. And the third common problem they come to me with is investing remotely. And it means that it's hard to build them local relationships with agents, with builders, to manage builders. They don't have the feet on the ground, and basically can feel a little bit exposed because of it. And with my company, so we've built over 75 portfolios for clients, which is £8 million plus worth of deals. We're currently Liverpool's highest rated property investment company.
Congratulations.
Yeah, thank you very much. Yeah. And back end last year, we got awarded Property Investment Company of the Year, highly commended. And yeah, I'm just on a mission really to help people avoid the pain which I had to go through to learn property investing and all the mistakes that come with it, and to help people create financial security through property.
Fantastic. And there's lots to unpick there. And we've got this whole episode to unpick that. You obviously talk with a lot of passion and a lot of confidence, a lot of experience. And let's just go back to the start though, because all of my guests, not one can be excluded, started somewhere. So let's rewind straight back to where you first got into property, and tell us, was it a career you've always been in? Did you have a corporate job and then move into here? How did the world of property, how did Pat Harper's career start outside of property?
So I'm an engineer at heart, and I've also got a background in construction. And I had a corporate job and worked very long hours and put everything I had into it. And I got sold the dream by my boss. Oh, you see this director here, that'll be you. Have we earmarked this for you? You can have this, you can have that. And these things just never materialised, basically. And I realised pretty fast, I've literally got no control here over my financial future. It's just some idiot has, to put it frankly. And I've got no real pension to fall back on. I'm not going to be leaving any legacy for my kids. And Warren Buffett quote really resounded with me. If you don't find a way to make money while you sleep, you'll work until you die. And it literally summed that era of my life up. And so I bought my first property in 2010, and I made literally every mistake under the sun. Let's not beat around the bush. So I got my numbers wrong. I worked with road builders who messed my properties up and basically lost money. I worked with mortgage brokers who lost me deals. I worked with solicitors who were so slow. Again, they lost me deals. But over the years, since 2010, I've built a very trusted power team of world-class people who surround me and help me invest and help my clients invest. I'm very lucky to work alongside these people. And with the sourcing company, where that sparked from was my brother. So he wanted me to help him build a property portfolio. And he's like a typical client of mine now. He basically doesn't have the time to do it himself. So I helped him buy a few properties. And I realised there's lots of people out there, just like my brother, who don't feel as though property investing is accessible to them. But with a little bit of help, it can be, and they can achieve great returns from it.
It's becoming more typical, the more episodes I do here, especially when I speak to service providers like yourself, that no one goes into their service with a view that I want to do this, let's just grow a massive business. It's always a case of they've invested themselves, they've learned lots of mistakes, and through being around those mistakes and learning, that they then say, actually, this is the way to do it. And then it sort of dovetails into, you help one person, usually a family member or a close friend, and you say, oh, these two dots join here. I've learned my mistakes here. People still want this learning that I've got. Let's create the provision from there, and then it sort of snowballs from there. No one goes, right, I'm going to go and get 700 clients in the first year. So I'm like, let's do one, and it works, and things just click. And what I've learned is that you learn from other people's mistakes, or you learn from your own mistakes. And that whole service is where the value comes from being a service provider.
100%, yeah. And as you say, sometimes it was never really the plan to start with, to start the sourcing company, but I just thought, I've done it myself, I've done it for my brother, I can offer a lot of value to people here. And there was a real kind of like need for it. And I thought, well, why not? I've always had that itch to kind of to start a proper business. And yeah, we're pretty much 5 years in now. And
yeah, no, well done. And I just want to touch on your award that you got, or the rating you got as Liverpool's. You said it was Liverpool's highest rated property sourcing business. Is that what you talked about?
Yeah, so we were looking at it the other day with my marketing guy, and we've got about 40 5-star reviews at the moment, which we're very happy about. And for us, it's kind of, we probably could have grown faster, but for us, the main thing was to give our clients a world-class service. And so how we manage that is we work on a one-to-one basis with our clients. So we've currently got about a 6-week waiting list, maybe 6 to 7 weeks. And when people sign up, obviously they secure the spot on the waiting list, and we just work one-to-one with each client, and then the next, and then the next. Rather than when we very first started, I did have a mailing list. And we used to have like 1,000 people on the mailing list, and we'd go out viewing properties, fire them out on the mailing list. We'd get like 100, 200 questions, and we're like, how by the time we've answered these questions, the deal had gone. And we're like, there's got to be a better way of doing this.
Yeah, definitely.
So now we've personalised the whole approach, turned it on its head, and our clients are happier, and we're very much happier as well.
And that goes back to that trial and error, doesn't it? Because you've realised that one approach doesn't quite work, so you pivot, and then you just refine. And the notes I've just jotted down there, and I think this is quite good, is for you, it's value over volume. It's not about just scattergun and getting like lots of 3-star reviews. It's like, let's focus on the 5-star reviews. And in a service like property sourcing, if you're dealing with London-based clients or international clients, you get one client who likes what you do. Very few of those type of people invest once. They usually come back and invest again, in my experience. Not forever and a day, but you might get a small portfolio of 5, 6, 7 houses. So is that typical? Is that something that you're seeing?
That's exactly what we're seeing, yeah. So repeat custom is probably when it comes to kind of like our marketing, where our leads come from, we probably get more from repeat custom than anywhere else. And then it's probably referrals, and then social media and website. It probably is that order.
Oh, good. And that repeat customers are easier customers to manage, because you've done all the onboarding, they know the value, and it's just easy for everyone all around to just go through the same process again. Yeah.
And in fact, recently we've actually brought a loyalty scheme out where they get a little bit of a discount from our sourcing fee for being having so many properties sourced by us already, just to kind of like reward them, because we know they're a great client, we like working together, and we should both be rewarded for that.
Sure. So let's jump into the type of properties then. So I've got a question about the Liverpool market, but I'll lead into that shortly. So tell me your process. So someone comes to you and says, Pat, I want to buy a house in Liverpool. What's that process that you go through?
First of all, I'll say great decision. Because it's literally the best place to invest in the whole world. But as you say, we'll touch on that in a second.
Yeah.
But yeah, we'll jump on a quick discovery call. I'll figure out what they're looking to achieve, if we're a right fit to work together, and assuming we are, then we'll get them signed up onto our secure spot on our waiting list, and then we'll start searching for deals for them.
From there, yeah. So let me unpick that point you said about the right fit. What makes the right fit, and conversely, what doesn't make the right fit?
Well, some people get in touch asking for HMOs, serviced accommodation, and it's not what we offer. So what we offer is 2 to 3 bed terraced properties that rent out to long-term tenants. And this is how I built my portfolio. And I only ever offer to my clients what I do for myself. And I've tried serviced accommodation, I've tried HMOs, and I can talk in detail about some of the challenges that I've had with them. But just to touch on HMOs in Liverpool, for example, I honestly don't think it's a good investment strategy in Liverpool at the moment, because what happened with HMOs is Article 4 came into play about 4 or 5 years ago now. Don't quote me on that. Around that time. And but where Liverpool Council kind of didn't play it very well because they were threatening to bring it in for a very long time. We're talking years. So what did everyone do? They went out and bought loads of HMOs in Liverpool before the Article 4 came into play. And just in case people don't know what Article 4 is, that means that when Article 4 comes into play, we can't convert any more normal houses into HMO houses. So people knew it was coming to play for years. They flooded the market with new HMOs, and now we've got a saturated market. But on top of that, there's been lots of off-plan developments getting built in the city centre, and a lot of the students just prefer to live there nowadays as well. So I think it's not a great investment in Liverpool at this moment in time.
Yeah, it's good. I suppose I will just touch on Article 4 as well, because HMOs is a really popular strategy, especially BRR type approaches. The Article 4 you talk about there is the councils make it more, it's more regulated in terms of you need potentially planning and licensing. There's a lot more stringent requirements, and one of those requirements is how many HMOs are within in the requirement when it comes to approving that license. And if everyone's saturated the market and turned them all into it, it's like Manchester City Centre. There's HMOs everywhere. So getting an Article 4 decision, to use the wrong terminology, but you know what I mean, is more difficult where there's a saturated HMO market.
Yeah, that's it. That's exactly it. It makes
Yeah.
everything's just much harder. And as you say, there's more regulation with it as well. And with the what we provide, the 2 to 3 bed terrace properties that rent out to long-term tenants, we find the right property on the right street, we refurbish it to the right standard, and then we know we're going to attract some great long-term tenants. Obviously, the reference checks, the credit checks, we meet them, and we know they're going to be great tenants. And we always aim for families. Mum and dad don't go to local school. Mum and dad work locally. Kids go to local school. And because we've provided them a nice home on a nice street, they may literally never leave. And that is set and forget passive income property investing. And the flip side of that, the alternative to that, is you invest in my opinion, in service accommodation, in HMOs, in flats, and you're getting a higher turnover of tenants, probably going to get more maintenance, and all these things are more headspace, more phone calls, more decisions to make. We've always got to remember why we got into property investing in the first place, and it wasn't to give ourselves an extra job.
Yeah, absolutely. Yeah. I think there's a lot of like short term benefit or high risk, high reward with some strategies like service accommodation, HMO. But the one thing that I was always taught many years ago is that there'll always be a need for a 2 and 3 bedroom house. There's a housing crisis in the UK. There's no sort of sight, despite the government's pledge of that being solved anytime soon. So I think there's always a need for that. And I think if you overlay that with a service provision that not just sources, managed renovation and lets it, but what does it in such a way that they're trying to mitigate as much as possible the risks at every one of those stages. And I think it's important, we talk about it all the time, there's no such thing as a risk-free property investment. And I think if you can mitigate the risks as low as possible, then it's as close to risk-free as you're ever going to get. And I think that's what you're talking about there. You manage everyone, one-to-one relationships, value over volume throughout the whole process. And it ends up from a conversation is, I want to invest and buy a property, holding people's hands all the way through to, there's your tenant, there's your ASTs, and they're there for however many years that you manage to do that.
And that's it. And that's exactly what the model that we've sculpted is over the past 5 years. It's the most low-risk, passive type of property investing because our clients, that's exactly what they're after. They've got businesses where they're working very long hours or jobs that they're working very long hours. So they just want somewhere safe to put their money in. It's going to give them some passive income and some really good long-term capital growth.
Absolutely. So let's move on to the Liverpool property market. And I'd be interested in your thoughts on this. My view on Liverpool is that the people I spoke to, they're on two ends of quite a wide spectrum. They either know the Liverpool property market and make it work and make significant profit, or people try and go into the Liverpool property market with no experience, no local builder knowledge, no idea of the sort of area, and just fail. I know people that have failed miserably in Liverpool, and I know people that have made a lot of money in Liverpool. Is that true? Am I just going on hearsay there, or what's your view from the inside on that?
I mean, I think when it comes to kind of like failing with like the build side of it, I do hear a lot of them stories myself. people struggle with builders and tradespeople. Now, I know that happens in Liverpool. I assumed it was nationwide, and there is a real lack of skilled builders out there at the moment. And the reason for that is 20 years ago, the government stopped all the apprenticeship funding. And so now we're suffering now because of that. And the amount of people that have been sent to me because by my mortgage broker or throughout my network saying, oh, can you help this person? No, they've been ripped off by a builder. And it turns out they paid them up front for whatever, and they basically just sailed off into the sunset and never to be seen again. And sometimes, funnily enough, sometimes they rip the house out. So they take everything out and then they disappear. I don't know why they do that. If they're going to disappear, why did they bother taking everything out to start with? I don't know. But,
I don't know. But I suppose we just caveat this was, like you say, there's a building trade skill shortage across the UK. This is not to say that all builders in Liverpool are like that. I think there's just a skill shortage. And like you say, I think if you know the market, there's certain markets that I think you just need to know to make it profitable.
Well, no, that's it. And obviously we're lucky enough to be investing for a long time now. And we've built up a fantastic network of tradespeople who really are world class. And you should see some of the before and after pictures of some properties we've done recently. It's absolutely amazing.
Yeah.
And it all adds up to kind of meaning that you're going to get a great tenant. You've got to keep the end in mind.
Of course it is. Absolutely, yeah. So in terms of your own portfolio, and you said that you invest in these 2 and 3 bedroom houses as well. I'm assuming the model that you use for your clients is the model that you've done yourself, how you source them, what sort of spec you put the build and renovations to, and then the reference checking for the tenants. Is it the same?
Yeah, Steve, did you want me to talk about finish on Liverpool?
Yeah, why not? Let's do that.
Sounds.
Yeah, go for it. Yeah.
Should just start speaking. So, why am I working with people from around the world right now, from Hong Kong, Singapore, UAE, London? They could pick anywhere in the world to invest in property, but they're picking Liverpool. And there's 3 main reasons. So, number one, we've got the highest growth yields out of all the UK major cities, which in a nutshell means you're getting a high rental income compared to a low purchase price. And the result of that is you're getting a higher net cash flow, so more passive income. And then the second reason is we've got £14 billion of planned and ongoing regeneration in the city. So we've got regeneration projects like Liverpool Waters, where Everton Football Club have recently completed their stadium, and they're actually moving into it next season now. And they've got the last game of the season at Goodison Park in May, and they're moving to the new one next season. I don't know if you know, they serve blue ketchup.
Yes,
What's all that about?
I know.
You don't need to change ketchup. That's how they want to. That's how different they want to be from Liverpool.
Yeah.
I'm a Liverpool fan. I'm very happy today.
Congratulations.
Yeah, thank you. So
I say that through clenched teeth because I'm a Man City fan, so it's slightly different. But yeah, congratulations. Let's move on back to property.
It's good. And so we've got that Liverpool Waters project going on, £5 billion there. That's one of the biggest projects in Europe at the moment. And so that's the whole waterfront's getting regenerated, and it's like expanding the city centre outwards. So we're getting hotels, retail, we're getting flats, which by the way we should never invest in. We could go into that for a long time. And why that's great for investors like you and I is it means the area gets regenerated, it's more desirable, more people move to the area, and supply and demand plays out. There's never enough houses, supply and demand plays out, and property prices go up. It's happened in different pockets of London. It's happened in Manchester. Manchester's regeneration started 20 odd years ago, and now they've had some really nice capital appreciation because of it. But Liverpool at the moment, it's barely started. And just to finish it off as well, we've got very affordable houses at the moment. So compared to all the other UK major cities, our affordability is really good. But obviously with all the regeneration going on, it's unlikely to stay like that forever.
Yeah, exactly. I think the parts of Manchester, certainly where I grew up, that like the difference between now and 20 years ago was like, not just in terms of property prices, but the whole area is like, it's just through the roof. And I know that area, Liverpool, that you talk about with Everton, it's gonna be the same. It's gonna be the same. And Liverpool generally, yeah.
Yeah, the plans look absolutely amazing. I mean, I was just looking at they've brought a plan out that's been approved for something called Central Park. Obviously, not New York, still Liverpool, and it's this massive park, and it's going to look amazing, and that's part of that Liverpool Waters project as well. But then I went down a rabbit hole the other day looking at some stats on Liverpool, because it's like, okay, well, this regeneration has started. It's been going a couple of years now, and it is at least, and it's due to go on for a few decades yet. I was like, well, is it affecting the capital appreciation already in a positive way? So the ONS stats, so the UK last year, according to ONS, Office of National Statistics, went up in value by 4.6%. The northwest of England went up by 5.4%, which surprised me. I thought it would be higher because obviously you've got Liverpool, it's Manchester. But Liverpool went up 10% last year. And I was just like, wow, that's like...
Is that compared to the previous year? Or the period?
Just last year. Last year. That's how much it appreciated in value, according to ONS. And so that's double the UK. More than double the UK and just slightly less than double the Northwest. It's like, wow. So it is already happening.
Yeah, and it goes back to people need to speak to experts before they invest, really, because it's too easy to go and invest in an area where you grew up. I find it might just be that area is Liverpool, and you just got sort of right place, right time. But I think, especially as expat investors, we always try and encourage people go where the best deals are, not go where you know. Because if you can build your power team, as we call it, and build your network of people who know better than you and are located better than you, and people like yourself who know the areas, and you can use the data to inform decisions, then you're in a much stronger position, and you're probably 2 or 3 steps ahead of where you would be if you try and do this on your own, making your own mistakes and having to learn from your own mistakes, rather than leaning on your mistakes, leaning on your experience, leaning on your data.
Well, that's it. I think you've got to decide when you start investing, which route you're going to go down. Are you going to go down the steep learning curve where you make the mistakes, and some of them may be costly, and you learn that way, or you work with someone who's already been through that process, and basically fast tracking your progress?
Yeah, absolutely. Really, really, really good section of this episode there, Pat. So I think there's more to dive into, and we might come back to it. Just moving on to your own portfolio then. 2 or 3 bedroom houses, same sort of model?
2 to 3 beds. 99% of them are 2 to 3 bed. I've got a couple of 4 beds. And exactly the same model, yeah. We rent out to long-term tenants, every single one. Well, apart from one serviced accommodation, which has been a pain in my backside, which I could talk about if you like.
Yeah, go. Yeah, probably plays into why you don't have many service accommodation.
I've had some challenges where, obviously, I had HMOs in the past. I sold them. I didn't have big challenges with them. I just didn't think it was a good market to be in. So they went. My serviced accommodation, so it was going really well, and I was working with a managing agent that I trusted and I liked, and he was great. And he basically sold his business to someone. Someone out of town, basically sold his business to them, and it turns out, to cut a long story short, this guy came in, he took everyone's rent and sailed off into the sunset, never to be seen again.
Wow.
And now, luckily enough, I've only got 1 property on service accommodation with that company, but some people unfortunately have multiple properties, and with service accommodation, your rental income is much higher than a traditional buy-to-let. And we're talking at least 2 months worth here of rent that they've lost, and so that could have really hurt some people. I mean, don't get me wrong, it wasn't a nice feeling for me.
Yeah, I can imagine.
And there's definitely been some lessons learned here. I suppose the first lesson learned from my point of view is I got an email saying, this company has now been sold to XYZ. And I didn't really think much of it. I thought business as usual. But what I should have done in hindsight, I should have treated that as almost hiring a brand new agent. So maybe I should have done my due diligence on the new owner, paired them to 2 or 3 of the managing agents, and pick which one I wanted to go with. Yeah. And because at the end of the day, if the head person's changing, I think we should treat it as the whole company could potentially change.
100%.
So that's the first learning I've had from that. Also, the next one is short-term lets are high risk. There's no doubt about it. If something goes wrong, you're going to lose more rent. The industry is much fresher and newer than traditional buy-to-lets. It feels much more unregulated.
Yeah.
It's full of just new operators, which are just not as established as traditional buy-to-let operators. Other key learnings I'd say is it's hard to pivot. So if I wanted to go, if I'm sick of service accommodation, my house is full of furniture now. Um, and
Yeah.
a lot of it we bought brand new. So as soon as you buy it, it's worth half the value. And getting someone to take it, you're just not. You're going to get pennies for it, if at all anything.
Exactly. Yeah.
So there's that, and the experience just basically just reinforced my belief in long-term tenants and passive, low-risk, reliable.
And I think you've touched on a few times there, and I mentioned it earlier. This high risk, high reward. Like I say, there's lots high rents. It's a very much a peaks and troughs type industry. I see service accommodation, whereas we're all taught, aren't we, that properties, the value in properties in the long game. So if you can get 2-3 bedroom houses that rent steadily and progressively go up in value, and you keep adding to your portfolio every few months or every year, etc., then looking back 10 years, the compound effect of that is enormous, and probably without the volatility of the more sort of high risk, high reward strategies. So I think does come down to what is your long term gain from property. Is if you're there for the long term, if you're looking for some things like pension type resilience or building wealth for the future, then there's a lot of value in that slow and steady compared to that high risk, high reward, short term cash grab type approach that you can get from things like service accommodation. So yeah, I do agree with you. I'm very much more let's build steadily. I've got HMOs myself, and I'm fortunate that I've got a good agent and they manage it. But I still see the noise. I still see the peaks and troughs with tenants that don't pay and tenant turnover and things like that. Whereas I've got 2 buy to lets and I have no problems with them, and they just steadily increase, and the rent comes in, and I get the odd request for a replacement tap and things like that, but nothing nearly as volatile as the HMOs.
Totally agree. It's your best chance of set and forget buy-to-let
Yeah,
property
yeah,
investing.
completely agree.
But yeah, I mean, with obviously the HMOs, the service accommodation that I've tried, and obviously with the service accommodation completely failed. I mean, that's the part of the value which we bring to our clients, because the reason why, one of the reasons why I tried service accommodation in the first place is because some of my clients started asking about it because they see it advertised, people selling the dream. And so my clients say, oh, might you offer this? We're interested in it, kind of thing. It's like, only if I do it first and it works. So anyway, you probably guessed that I haven't offered this out to my clients.
Yeah, and I think there's a lot of credibility in saying I've tried this, it doesn't work, so I don't offer that service. I've tried this strategy works. This is what I'm going to focus my time and effort on, and that's obviously what's born the fruits that giving you your client base now on your waiting list, because like you say, you've tried it, you've tested it, and you've done it yourself. So I think, like I say, I think there's a lot of credibility and a lot of kudos should go to yourself and people like you that do that, rather than just sell a dream that they can't back up through their own experiences. Yeah, great. This has been a great conversation. I'm really getting to know Pat more than I thought I did, and hopefully people will see Pat as the person here. So you've obviously got a lot of experience. You've tried things that haven't worked. You've focused on things that do work, etc. Apart from the service accommodation experience, any other sort of big lessons learned that you can share that other people can avoid?
Yeah. So cowboy builders. So obviously we've got constant projects going on at any one time. And every now and then I'll try a new builder just because you've got to keep networking. And I remember trying this one builder, and we did all the due diligence on him. We met him at a job. We looked at his limited company on company's house. We did the schedule, got him to do a written quote, did all the due diligence on him, and seemed great. So we gave him a go, and we always start new builders on small jobs because it means then that it's lower risk. You start them on a big job, more can go wrong. Start them on a small job. So we started on a small job. Went in there day 2, and I was like, "Oh my god, this quality is just not up to scratch. This is not going well." So I just said to him, "Look, can you invoice me for what you've done so far, please?" And later that day, an invoice came in, and he tried to invoice me for a lot of work he hadn't done yet. And I was like, "Oh no, please just invoice me for what you've done." And he turned really nasty. And I was like, right, getting down there. I'm changing the key safe code on the property. And look, the code got changed. I paid him for what he's done, and we both moved on. But I just think you can see how new investors get caught out because it is so difficult. Even if you do all the due diligence that you possibly can, you went through every correct step that you possibly could. you still never know truly if it's a good builder until you've worked with them.
And I think you've played it well there, because the examples I've seen is that people will go in and give builders who they've never worked with before big upfront payments to do big jobs, HMOs for example, and if that goes wrong, it's nearly impossible to recover. Whereas at least if sounds like your model is more about, right, I've not tested this person, I'll do some checks, but even then you'd have to start with the smaller stuff. Imagine you did give that guy a big renovation project, tens of thousands of pounds, and then you found out it wasn't good. Not only are you harming your reputation, but you've actually got to probably to try and protect that reputation, recover that reputation, actually try and invest your own funds to try and get that back on top. So I think it's good to test, and I think you do need to keep keep sort of your contacts there. But in terms of knowing and having a trusted team, I think that's another reason why you need to go with people with experience who've been here and done that before.
Exactly, there's so much value in that, because if you know that the person you're working with has got that relationship with them builders, that you can avoid all the potential conflict, the risk, the losing chunks of money, and the heated arguments if things don't go right.
Fantastic. I mean, we're dovetailing your experiences into top tips here. Is there any other sort of big lessons learned? You got service accommodation. We talked about cowboy builders. Anything else that you've learned from before?
So I think number one, it's keep it simple. Long-term tenants all the way.
Yeah.
Avoid giving yourself extra headaches. Number two, invest in areas where you've got cash flow and capital growth, because they're the two main ways you make money with property investing. And obviously Liverpool's perfect for that at the moment. Number three, choose very carefully about whether you want to go through the learning curve yourself for property investing or work with someone who already has, because they are two very different routes. And I think it all just comes down to a mindset. Slow and steady wins the race.
Yeah, absolutely. And we talk about with Expat Property People, of which this podcast is part of, is that we have these investors that want to go and do it themselves. But as expats, you do need to build that contact and list of service providers in the UK, whether that's a solicitor, mortgage broker, source build manage, utility management, whatever that is. And then we have other people who's like, no, I don't really want to get involved in property. I'll just invest. I understand that property can be good for wealth building, but I don't want the hassle. I'll just invest in projects. And I think there's somewhere in the middle, there's people who still don't know what to do. So they'll just outsource everything to a source build type manage provider like yourself, just to see if property is what they want, if they want to own assets. And so I think as expat and remote investors, the property industry is like no other. You can test where you want your appetite to be. Do you want to be more on the hands-on type approach, or do you want to be more on the I don't really want anything to do with it, I'll just park my money somewhere and do it? And then in the middle is I'll let somebody else manage it, but I'll own the property at the end. And if you can do in that one, then you really do need to have a good, strong network of trusted advisors, of which obviously you've built with your client base as well.
Hit the nail on the head there, yeah.
Fantastic. Pat, this has been great. I'm sure a lot of people want to pick your brains a bit further about the benefits and value of Liverpool market in terms of buy-to-lets and just generally industry. What's the best way for people to get hold of you?
I've got an offer, Steve. So obviously you're a great friend of mine. And,
thank you.
I want to help out your listeners, and I'm going to offer a free deal analyzer.
Right.
And once the deal analyzer, just message me on LinkedIn, Instagram, which is, or any of the social media platforms. My profile is Pat, P-A-T-J, just the letter J, Harper, H-A-R-P-E-R, Pat J. Harper. But if you want to email me, it's pat@totalpropertygroup.co.uk, and I'll send you the deal analyzer, no problem whatsoever. And just give me a follow on socials if you don't want the deal analyzer. I'm always posting about property stuff.
Fantastic. And for those that can't write that down or are driving at the minute, we'll put all those details in the show notes so people can click on that there. Pat, it's been great to catch up with you again. Great to hear your story. A lot of new bits of information there that I didn't know about you. We've known each other maybe 18 months, 2 years now. So it's always good to catch up with you and learn more. And like I say, I think a lot of people will be interested in the value and opportunity in Liverpool. So I would expect people to get in touch with you soon. But for now, thank you for joining the podcast episode, and we'll catch up soon.
Cheers, Steve. Thank you, everyone.
All the best.